Alrighty, folks, we're just about to get started here with SPDas, covering New York Part 2. Just give me a moment here while I get things set up. Hey, everybody. So, so we just came off with IT Trader covering the smart money ICT concept. Serious business, you can see how the markets are correlating with the analysis in real time. SPDas is just about to start. Super excited for this session as both market narratives, including the AI narrative, are lining up since January 1st. So it's nice to see the confluence points and divergences. However, as time goes on and proves that the classical trading, the neoclassical trading, smart money trading all converge and are converging as the story unfolds. So stay tuned. We'll be passing the microphone over to SPDas in just a moment.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.
SPDas, we're ready to go whenever you are.
Okay, thank you, Igor, and hello and welcome back, everyone. Let's get straight away started for the wave counts. I've just removed the projected path just for simplicity, and maybe for those who are joining fresh, we can do it again. And the push which was expected, but we were not expected this early, has already materialized. So trading point of view, we are good to remain on the long side. If you have booked profits, don't worry, please. There is going to be a pullback either now or around 1.0450. Now, for those who have joined fresh, I would like to quickly touch base with the daily chart once again. The historic price action suggests we have done 5 waves on the upside. Let me change the degree quickly. That's minor degree, and followed by the ABC corrective decline as well. I got to change the degree as well. And since Monday, we have been calling for a long euro against 1.01, which has materialized quite nicely, and price action has already taken out a couple of resistances. I'm going to take you quickly on the hourly chart. Give me a moment, please. So please keep the bigger picture in mind. The 61.8% bounce, the larger degree wave 1, followed by wave 2 is in place. Ideally, we are now moving towards a wave 3 or wave C higher in the tune of around 1500 points. Okay, now the business lies on the hourly chart. If you allow me a quick okay, this is fine. This view is good. Now, the reason I removed the path is, of course, the path has been taken good by the markets. The only thing is that we got to keep changing what is happening. So let's be. That was wave 3. This is wave 4, and that is it could be wave 5, or just about one more high Okay, and the degree here is going to be minute. Remember, five waves of the minute. I took it wrong. Instead of minute, it should be minute. Okay, now either wave 5 is complete here or it's going to push one more time somewhere around the vicinity of 350 or so. The idea is okay, one more thing, please. If you are positionally long, there's nothing to be done. Just place your stop loss around 1.01 and forget about it. Each retracement, you're going to add positions like what we've done earlier. All right. If you are not into the trade, this is not the price to get in on the long side. Please, we got to wait patiently for a pullback because the risk reward ratio, if you buy around 331 right now, it's going to be around 230 points of risk, which could be okay looking at the overall positional trade setup, but still it won't be the optimized level. All right. So the ideal situation is if you have not entered into the trade, you have to wait for a corrective decline. Now the correction is going to come somewhere from this price. Okay, what we were anticipating in the last session, the correction has not materialized, but it is still going to towards the projected trend. Now the next resistance is almost taken out. We are now looking for, the bulls are now looking for 450. So we cannot say, okay, kindly produce a retracement. So we'll have to wait for that retracement. All right. In the meanwhile, we might have to adjust this wave count as well. It's quite possible that wave 3 is extending and wave 3 could be print there and there could be a minor wave 4 correction and wave 5 goes up there. All right, we'll find it out in the next session, Tokyo Sydney overlap. We should be able to find it out because if that's wave 1 and 2, and this is wave 3, 1 of 3, 2 of 3, 3 of 3, 4 of 3, and 5 of 3, then the minute 3 is going to come there. In a nutshell, the basic thing we need to understand is that we've got the trend correct. Point number one, we have entered positionally long. Point number two, stop loss is going to now remain firmly around 1.01. So these three are going to remain with us. Okay. Now let me try and take the Fibonacci ratio of the current scenario where a corrective decline should materialize anytime soon. And ideally if the corrective decline materializes from here, let me find out with the RSI. Okay, the RSI is kind of diverging. It's not exactly diverging, but it's not produced a new high, which it should have been. So possible three-wave corrective decline could be like that. That should bring us towards 244, but it's not necessary that the correction is going to come right now. This is our projection. Market might choose to continue rallying higher. So positional traders, please hold on to your longs, and those who have not been able to enter, just for that sake, once the 450 resistance is taken out, the let's say if it continues to print higher, that is a major resistance, wave 4 of a lesser degree, remember? Then a correction is going to materialize. So we will get a chance either now on a correction or after 450 on a corrective decline. For those who have not been able to catch the train, I mean, don't worry, please. This is just the beginning. We are just underway to print the first larger degree wave count. These are the smaller degree wave counts. All right. Once we have minute wave 1, there's going to be minute wave 2. So nothing is going to be left out. All right. I'm going to remove and I will draw once again when I come back with the recent price action update so that we don't have to adjust the path again and again. But if the corrective decline materializes from here, then 245 would be a good place to re-enter. All right. No ways are we trying to trade counter trend or initiate short positions. Now, this is a good time for us to discuss what the world is discussing. All right. I just heard a video on a news channel saying that dollar index has print a 2-year high. Okay. Now, what's the difference between what is information and what is knowledge? Now, anyone who's following the price action or the charts, they know that the dollar index has printed a 2-year high around 1110. All right. So, giving a news flash on television or on YouTube that dollar index prints 2-year new high ahead of uh, Trump ceremony or Trump inauguration doesn't mean anything for a technical person. It is just information, and everyone knows the information. I mean, it is not rocket science to find out that it's a 2-year high, correct? Now, the big question always that you should be asking as a trader, what is next? Now, that's where the technical price action and the Elliott wave theory and the technical analysis like Fibonacci and trend lines and all those stuff comes into picture. You've got to differentiate between information and knowledge. All right, what is happening and which is what is being told is just information. All right, prediction of the projected territory of what the instrument is going to take place or going to take in the next one day or 1 month or 1 week, that is called some kind of trading insight or knowledge. All right, so we don't rely on, and I suggest that over a period of time, if you keep following these sessions, you are going to stop relying on any news or media or any other information, because information is freely available. All right, now getting back to that point, when it was 110, aggressive shots were taken already in anticipation of the 5 wave completion, but it was an aggressive shot. Then we predicted the first support to be taken out, it is out now. Then we have, it's almost the second one is also out. Now the third one, just in the last session, we projected that the next in line is 107.75. And that's what price action is hinting right now. Now, whether it's going to go from here or it's going to pull back, we can find out a rational probability. Now, I think that it's going to be 1, 2, 3, 4, and 5 complete with a potential RSI around the 30 mark. There could be a pullback any moment now. So, if you have not traded and if you have not got into the larger degree trend, here's the level that you can. Not right now, sir. This is not the right price to enter shorts. The risk is more. The optimized price is somewhere around 109.56 with a stop loss around 110.30 and a short term target of around 107.75. All right. So please hold on to your instincts or hold on to your impulses if you want to get on the short side. Maybe the correction is not yet due and it continues dropping lower. See, when the trend changes, when the bulls are out of control and bears are back in control, what's going to happen is lower lows and lower highs, period. We need to understand that. And the sequence has already started. Now, if we try and project this wave, that could be wave 1, sharp wave 2, 3, 4, and 5. this is one way. But what if the third wave is extending? If the third wave is extending, the drop is going to continue. It's going to be 1, 2, 3. So the third wave is continuing, and then it's going to be fourth wave, and then it's going to be fifth wave. That is where the third wave is going to complete. And then we've got wave 4, and then we've got wave 5. So there are so many alternate counts, and that's why I'm planning to do the counts each session now. All right. Bottom line, immediate target 107.75. After that, we are going to see a pullback with around 85 to 90% probability. So if you have missed the trade at this point in time, please do not rush. Please do not chase the price action. We've got to trade according to the plan. If the plan is going down right now, just sit tight and wait for a corrective pullback. It is going to come. Prices don't go in one direction non-stop. All right. And remember the pattern head and shoulder that we discussed the other day. It's going to make that and then reverse sharply. Okay, pound is again already into the third wave. I was just watching the chart right now. So if you want to label this one, it's going to be like that is one, it's two, and then this third wave is extending. So I'm going to print that wave 3 here, and then wave 4, and then wave 5. This looks a neat little poised impulse wave which pound is going to take or expected to take. And the third wave is extending. That means there is a sub-minute, just in case if you want to know, there could be a sub-minute 1, maybe sub-minute 2, and sub-minute 3, 4, and 5. And we change the degree here from minute to minute to sub-minute. That's it. All right. So this is what could happen, but pound is heading towards 1.25779. That's what is the resistance, correct? 2580. So hold on to your guns. But if you're see the risk reward ratio in pound is not that bad. I mean 1.2284, and the stop loss is around, but it's still 200 points actually. So, but if you want to get on the long side, you've got to get either now or on a correction after the new high. All right, maybe if you're getting in right now, you can place a stop below that wave 2 low as well. That will reduce the stop. It's 2140, so maybe you can keep it at 2100. All right. So pound is also on the long side, sir. And if you notice on the daily chart, the resistance. This is the beauty of smaller time frames, carving smaller waves, building a larger degree time frame on the daily chart. Now let me zoom in a bit. Zoom out a bit, sorry. This is the first resistance, which is 435, 440, 50. So by all means, bulls will want to carry on from here, take that resistance out. They will attempt to do that, and then take a break. Okay, so you will have to have. I mean, we will have to have some patience before a major correction can be expected now. All right. Okay, gold. Gold just pushed a bit higher, but still the structure remains same. I'm going to flip the chart to 4-hour. And the structure that we are now anticipating is as follows. Okay, let me just do the path here. That is, if it's a triangle, then it's going to be A, B, C, D, and E. That's it. That's where we exit, and the next rally towards 3100 mark. But if it breaks below that particular trend line of the triangle, then we will have to reconsider options. Maybe minor wave 4 is setting up to drop lower towards the 2500 mark. All right, but we will stick to our trade plan here with this. It's a good place to re-enter on the short side if you have still not taken 83 right now. Stop loss goes about 27.30, and the take profit goes around 26.30 for now. If it breaks lower, we'll again take a chance for re-entering the shorts and carry forward towards the 2500 mark. In a nutshell, but if you're a long-term trader or a positional trader, or if you're physically wanting to enter gold, this is not the price to do so. You'll have to wait until at least 26 or 25 to get on the long side, because there is one more high left in terms of minor wave 5. All right, and next is the Dow Jones. See, that rally, I mean, we were talking last session, the correction might not materialize as we want, but one thing is materializing, and that's good to see. The projection is clear. We are towards the second wave now, somewhere here, all right, at a minute degree. Now, most of the traders, did I tell you 3 days back? Did we discuss this? Yes or no? That the rally is going to be very sharp, very steep, and very fast. You can go back to the videos if you don't remember or you want to recall, because this is what is called a bull trap. Now, most of the traders, most of the trading community is going to start feeling that, okay, the downside is done, the corrective decline is done, wave 4 is complete, now we are into wave 5, or wave 2 is complete, we are now into wave 3. No, sir, you've got to be very careful. This is just a bull trap. Okay, we might be wrong, but for us, I mean, to prove us wrong, it has to go and break that trend line, enter into the buy zone, and comfortably stay there. I mean that's what is required to be done, and I would stay until that price doesn't take out that high around the 45,000 mark. Uh, we are good to sell on rallies. And look at that rally. How is it materializing? Bulls are absolutely in control, fiercely in control, but it's not a buy call. The moment it reaches, I mean, last session, a few hours back, we were talking a 2,000 point rally in Dow. It's almost covered 1,000 points already, maybe, or just about 1,000 points. So we are about 1,000 points left, and after that, it's going to be a major reversal. That's what is the chart is telling us a story. Bitcoin, I just viewed the chart. I'm sorry for those who have missed the bus. This is what happens when the bulls are fiercely in action. But the price to enter on the long side is again not this one. You've got to wait for a corrective decline. And if the corrective decline is not seen right now, don't get emotional and get into the wrong side right now. That is another common mistake. You see the price action moving and running away, and then you get emotional, and then people or friends ask you, did you buy Bitcoin? I'm already in the long side from 90. You never know. He must have been, or he or she must have been holding it from 108 until 90, and now they are long. So please don't get emotional. There is bearish divergence coming here. Ideally, there should be a pullback before the next bull run resumes. And that pullback is also going to be meaningful, 60% or 50% of the current rally. And I would not be surprised to see prices back towards 93,000. Ladies and gents, this is technical analysis. No emotional trading is going to work. We've got to we've got to act according to the price action. It's running away right now. It looks like it's running away right now, but we've got to hold our nerves. This is not the price to buy. If you have entered the long side, good enough. You can take your profits, you can move your stop loss or do anything you want. But stop loss should not be moved above 91. That's the 78% touch. All right. If you want to get on the long side, you got to allow that pullback and then reverse. All right. And I will be watching in the next few hours. If it looks like the five wave decline was the first impulse lower and that is just a pullback, then we will change our track completely. But that we will discuss in the Tokyo Sydney overlap. Okay, Ethereum. If you go by any means on the stocks and the cryptos, if they are by any line, then they are all risk assets. They all fall into the category of risk assets. So it is called, fundamentally, they call it a risk on right now. That's risk on, nothing more than that, okay? Once again, it's 1, 2, 3, 4, and 5. Ethereum prints a new high of the session high, but not convincing RSI at all. Anytime a pullback is due, after a pullback, you may want to enter long, but the stop loss is going to go below the 2900 mark. Something like this. The longs are not good at this point in time, looking at the risk reward ratios. And I'm still skeptical on the drop here. It looks like 1, 2, 3, 4, and 5. That's an impulse. So if this impulse is again a corrective wave of the larger degree, okay, we are still good. But if it's not, then we've got to be very careful. All right. But that doesn't mean that we are ruling out a new high. We've got to look into both sides. I mean, it looks like a neat ABC corrective decline complete, and a new wave 5 rally has begun. But to get into this rally again, if you are getting long right now, the stop loss will not change. It will go around 2900. All right. Or better, wait for a corrective decline and get on the long side after that. Okay. Solana. Same story. I mean, and we should be happy because what we had projected 1, 2, 3, 4, and 5 is now complete. Let me bring up the wave structure here once again. That's an impulse complete. Of course, the degree is not what you're seeing right now. The degree is minute. If it's correctly done, we can also check the Fibonacci extension if it's matching the projections or not. See, that's the 61.8, 0.618 touch. So maybe around 198, the target should be met, and a pullback should be materializing thereafter. And we have the retracement. So a better place to enter would be 183 now. Again, a humble warning, please don't rush into the long side emotionally. and I'm sure the Ripple must have short, but no change there. Ripple we have already got long, and on the right side you see this guy. No matter what the others are doing, this guy is playing its own way, and it's a good way to play. I mean, wave E and then wave one, wave two, and then one, two, three. There is a sideways wave four acting. So if we look at the chart properly and if we follow that path, that nothing is going to go wrong. This guy is preparing for a pullback, ideally, and the pullback is expected to some end somewhere around 2.6, at least 2.6. Let me find out if there's a Fibonacci convergence. These are old time techniques, not the Elliott wave, but they are very effective at times. Okay, you see the extensions and retracements matching somewhere between 2.58 and 2.63. The 58 and 63 should be the next zone. Okay, I've kept the longer term path intact for Ripple for reasons, so let's keep it that way. But do you see that triangle breakout, and see that breakout is coming up very nice and fast and sharp. This is what the thrust waves are made up of, which we discussed earlier on. All in all, we are on the right track with respect to the price action projected. Now we just need to wait for a pullback. Maybe euro is just cutting loose on the south side, sir. Did we discuss just 15 minutes back that don't rush into the price action emotionally, let the pullback come. We've given the price targets 1.0245. That will be the next entry level. Okay. So with that note, once again, thank you for tuning in, and we'll bring it a pause here. We'll be back again after a few hours for the Sydney Tokyo overlap, and the price action is correcting nicely. Watch out for 1.0245 for euro to get in. We'll catch up the trend again in the next session. Thank you. Back to you, Ego.
Thank you very much, SPDas. Always a pleasure. And we'll be signing off and see you at Sydney, Tokyo.
Thank you. Yeah, me too.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.